Very good afternoon, ladies and gentlemen, and a warm welcome to all. On the call, I am joined here by Mr. Ramakrishnan, our co-founder and director, Mr. K. Natarajan, Chief Operating Officer, Mr. Ganesh Kamath, Chief Financial Officer. The results and the presentations are available on the stock exchanges and our company website, and I do hope everyone has had a chance to look at it. Let me start by giving a small brief about our company and industry before we move on to the financial performance of the company. Galaxy is an Indian multinational and preferred supplier to leading multinational, regional, and local FMCG brands across the globe. We are India's largest manufacturer of oleochemical-based surfactants and specialty care products that are used as ingredients by the home and personal care industry. Ladies and gentlemen, surfactants are products that enable removal of dirt and oil, and hence are the core ingredients of consumer-centric products like shampoo, washing machine detergents, hand wash, household cleaners, etc. Our specialty care products get used for specific functional benefits like sun protection, preservation, nutrition, and when I say nutrition, not food nutrition, but hair nutrition or skin nutrition, mildness, and are critical ingredients in skin care, oral care, lotions and creams, face washes, etc. Galaxy has been in this business since 1980 and have proven our credentials through our long-standing trusted relationships, high level of innovation and solution providing backed by 47 patents, robust quality systems, and serving over 1,700 customers across the globe. Though our products can be used in other industries, Galaxy is completely focused on the home and personal care FMCG industry since inception. 2017-18 has been a year of making our company stronger, strengthening our position in our home base, that is the Indian market, where we grew by 14% in volumes, in the EMET region by 11% in volumes. We fortified relationships with our existing customers, increased value share by cross-selling and enhancing the product basket with customers, added new customers across markets and geographies. We took our innovations to customers, enabling them to launch new products and solutions to their consumers. While 2016-17 saw a turnaround of Galaxy Egypt and the Performance Products Division of Galaxy North America, 2017-18 saw a sustained growth wherein all our divisions, that is Galaxy India, Egypt and Tri-K, grew despite a competitive and challenging environment. Ladies and gentlemen, the global surfactants market was valued at $30.65 billion in 2015 and expected to breach $45 billion by 2024 at a CAGR of 4.4%. In volume terms, surfactants are 16.35 million tons and expect to touch 23 million tons by 2024. The personal care segment is expected to be the fastest growing segment. Performance surfactants for us also includes certain ingredients which are high margin products along the same lines as specialty care products. The performance surfactants and the specialty care products play a very complementary role, and they together drive the profitability of the company. The performance surfactants will be particularly pronounced in the emerging markets like India and the Africa, Middle East and Turkey region and parts of Southeast Asia. We have been granted 47 patents globally and have applied for 36 new patents. We have 7 state-of-the-art manufacturing facilities, 5 in India, 1 in Egypt, 1 in US for the 200 products that we manufacture. The utilization level last year was roughly around 70%. Now let me come to the FY 2018 performance. As I said, we have a mutually complementary two-pronged strategy to grow in both the emerging and the developed markets, driven by increasing our share and sustainable growth in both the categories, that is performance surfactants and specialty care products. For the period ending March 2018, that is 12 months ending 2018, March 2018, we saw a volume growth of 11.2% versus the previous year. The performance surfactants during the said period has seen a 13.2% volume growth, and the specialty care products have seen 7.6% volume growth. I would like to reiterate and repeat that Galaxy, we measure ourselves on volume growth, EBITDA growth, PBT growth, and return on capital employed. Our volume growth in India this year also included sales from an intermediate product being sold to one of the large FMCG brand on opportunistic basis. Now, this is a spot opportunity. The said product, of course, gave us an ROC of 22% plus, which works well in favor of the company. There has been growth across customer segments and geographies. We have been able to increase market shares in India and AMET markets on the back of double-digit volume growths. This in turn has also helped us to grow faster than the markets, which has been the trend over the years for Galaxy. As far as US FDA is concerned, we are very pleased to inform that US FDA has concluded the inspections for both the M3 and N46 plants at Tarapur, and the inspection stands closed under 21 CFR 20.64 D3, that is their noting, and we have received establishment inspection reports. Now, as you know, US FDA had conducted in March 2018 inspection of the above two facilities, and it issued observations under Form 483 with an inspection classification of voluntary action indicated. These observations were very procedural in nature. We have responded to these observations fully, and this resulted in closure of this inspection. We have undertaken debottlenecking of capacities of certain key products, which will add to the growth momentum going ahead. We see this operationalizing at different points in FY 2019. To sum up, ladies and gentlemen, FY18 has been a remarkable year for us. We are confident of continuing on the growth path backed by our strong R&D and in-house manufacturing capabilities. Now I would like to hand over the call to Mr. Ganesh Kamath, who is our Chief Financial Officer.
Let me take you through the financial performance of our company. Our top line for 18 grew by 12.5% at 2,444 crores. Our EBITDA margin has been steady at 12.2%. Now, this EBITDA margins had two impacts on it. The average exchange rate realization for the previous year was 67 rupees on our exports, whereas for the current year it was 64.4. This has affected the gross profit by rupees 8.5 crores for 18 versus 17. There was an LPT impact which we have discussed, levied in Navi Mumbai area in the pre-GST era. The same has impacted our EBITDA by 3.2 crores. Now, if you add 3.2 and 8.5, our EBITDA margins adjusted stand at around 12.7%. The PAT stood at 158 crores with 7.1% growth against 17. Our CapEx planned for the next year is about 125 to 150 crores. We have reduced our debt by 55 crores from 393 crores to 348 crores. Our debt equity ratio stands at 0.48. We can now start, ladies and gentlemen, with your questions and our answers.
Thank you very much, sir.
Yeah.
Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Amol Kotak from Max Life. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
Hello?
Yeah, good afternoon. Good afternoon.
Yeah, can you give me the broad revenue breakup between the two product lines?
Yeah. The split between performance surfactants and the specialty products remains at around 65-35. Yeah. So the actual numbers are, sorry, the actual numbers are 1553 crores and 813 crores. Okay?
Okay.
Yeah.
Second question is, sir, I missed on the CAPEX number for FY19.
It will be 125 to 150 crores.
And how much was it for FY18?
FY18 it was around 30 crores.
30 crores. Sir, in your balance sheet, I see other current assets have increased sharply YOY.
Yes.
So can you explain that thing?
Two factors in this. Our sales this year was more in favor of T1 customers.
Sorry?
T1 customers generally we extend. That is basically MNC customer sales were larger to whom we extend credit. That is one aspect. The other aspect is there is a build-up of around 55 crores GST receivable.
GST receivable, yeah.
GST receivable of 55 crores. Yeah, GST.
Yeah. GST receivables.
You said build-up of credit again, so that should be part of debtors, right?
Part of working capital. I am talking about other current assets is 55 crores of GST. Well, 55. Other current assets, no?
Yeah, other current assets, yeah.
It is basically you are talking from 62 crores to 118 crores. Am I right?
Yes, yes.
In that that is what I am trying to tell you. In that we have 55 crores of GST receivable.
Okay. Sir, and what sort of volume growth should come in next 2 years?
See, as you know, the India as well as our target geographies are leaving behind a period of tepid growth, and we are seeing buoyancy in these regions. I think India has been growing pretty well. I think this year, as we told you, we have grown at 14%. So Galaxy will always grow better than the market. I think if the Indian market is expected to grow in this coming year by about 10%, certainly Galaxy will be ahead of the market growth.
Sure. But sir, any number would you like to?
No, we wouldn't like to say mention any specific numbers. What I would like to tell you is that we will certainly grow better than the market. This is what we have been doing in the regions that we operate.
Sir, one question on the margins this quarter. We've seen some muted kind of this thing. What are the reasons for that?
You're talking about the EBITDA margin?
Yes.
The EBITDA margin, there have been certain expenses. Basically, there are 2-3 expenses. One is relating to the actuarial valuation of gratuity, which is about 1.4 crores or so. Then relating to CSR, then relating to repairs. These are the main expenses which come to about 7 to 8 crores, which has affected the EBITDA margin.
And which, came in the last quarter. Yeah. These are period closures.
And in the case of REPEX, generally what happens is that during the quarter the job is taken, it gets affected.
Yeah. Does it answer your question?
Yes, sir. Sir, and other income was also down. YOY.
This is the operator.
Other income was down because, see, in Egypt we account our export incentive on the basis of cash receipts. So last year we had a higher export incentive received, and this year the export incentive is lower there by around 3.5 to 4 crores.
Yeah. And this receipt is given by the government.
Yeah. So we account there on cash basis, on the basis of receipt to be conservative.
Yeah. We are quite conservative there. We don't account it on accrual basis. We account it on received basis.
No, sir. Thank you so much.
Yeah. Thank you. Yeah.
Thank you. Participants who would like to ask questions, please press star, then 1. The next question is from the line of Saravanan Vishwanathan from Unify. Please go ahead.
Yeah, good evening, sir. Thanks for the opportunity.
Good evening.
Yeah. In terms of gross profit per ton, as our product mix improves, would it trend up, or because the current year it was either flat or it was trending downwards? So how should we read into this?
See, I would like to reiterate that Galaxy shall grow on both the categories, that is performance surfactants as well as specialty care products. The performance surfactants get mainly driven by aspiration and affordability in the emerging markets like India. In India, the penetration is still at a low level, and there is good amount of headroom for growth. So in both the AMET as well as the Indian market, the performance surfactants will continue to grow. As you know, the HPC industry is expected to accelerate its growth in the coming years, and performance surfactants will certainly grow. Now, the specialty care products also will grow. We measure ourselves by growth on both the categories. The specialty care products primarily today are driven by the matured markets like USA and Europe, and they go into high premium category personal care products, especially high premium skincare and hair care products. So the what we call the EBITDA margins will remain in that particular zone that we have talked about, anywhere between the 12 to 13% or so.
Okay, so the way to look at it is absolute growth in EBITDA will be more or less in line with the volume growth.
Yes. So in fact, Saravanan, if you see even this year, in the FY18, there were two, adverse impacts. One was the local body tax, and the other one was the average forex rates differential between the previous year and the current year. If you take both these adjustments into account, your EBITDA margins growth is almost in line with the volume growth. Okay, so this was something very specific to only the current year.
Yeah.
Okay, understood, sir. Thank you. All the best.
Thank you.
Thank you. A reminder to the participants, to ask a question, please press star, then 1. The next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, thank you, sir. Thanks for the opportunity.
Yeah.
A couple of questions from my side. One, on the specialty care product side, this quarter around we have seen a 10.6% sequential decline. Is there a particular reason for it, or it's more of a seasonality there?
It's more of a seasonality.
If you compare half, the second half versus the first half, there is a growth.
There is a good amount of growth.
There is a good amount of growth in the second half and the first half.
A dispatch timing issue, so that's the way, because it all depends on...
For example, the H2 growth versus H1 was almost 18%.
Okay.
Yeah.
So it's more of a seasonality, and you're telling there is some dispatch-related issue.
It's a dispatch-related. Okay. Sometimes the customer can seek a bunched dispatch.
Right.
Yeah.
So this is normal, general business, nothing to worry about it.
Yes, nothing to worry.
And employee cost jump of 29%, you said it's more of an actuarial revaluation. Is that the reason for employee cost to sharply move up?
Q3 to...
No, I'm talking from last year to this year, 29%
Last year to
jump.
this year, see, in actuarial valuation, when we go for say, Ind AS, there is a movement which happens between OCI and P&L account.
Okay.
So last year, there was something moving to OCI to the tune of 2.4 crores, which is reflecting there. Okay? Now, this year when we close, there is something 1.3 crores is coming on the moving from P&L account to your OCI here. So what is going to happen is that if you add 2.38 which is negative and 1.3 which is positive, 4 crore impact flows only from that between two periods. If you see the OCI line, it is there which is given here. Okay, items that will not be reclassified subsequently to P&L account. This is the one. Second is there was a 3 crore expenditure coming from Trike relating to some regrouping of the employees over there in PPD division, which we had acquired.
Yeah.
Now these two expenses accounted for nearly 7 crores and balance 2 crores is the normal increase which has come forth.
Okay. So, but now whatever we have reported this employee cost, this will be a new normal, right?
Yeah, new normal. See, if you look at year to year also, the increase is hardly 5 crores.
Right.
Yeah. The year-to-year increase, if you see, if it has moved from 141 crores to 146 crores.
Okay, on a yearly basis.
Yeah. Yearly basis. Yeah. Therefore, it's not significant. It is just some accounting aspect of Ind AS which has come into play.
Okay, got it.
Yeah.
And if I subtract the consol minus standalone, so what is left is basically our Egypt and US business.
Right.
Now, this business has shown a sequential decline. Why is that on the revenue side?
Revenue side, it has shown
a decline.
This is for the quarter of the year?
Yeah, for the quarter, Q4.
For the quarter.
A sequential decline. So there is a sequential decline of 0.3%.
Yeah, I think that was again to do with, see, in Egypt we had some of the dispatches that actually got pushed to what happened bunched up in the previous quarter. So that's the reason the way we explained for you in Galaxy Surfactants.
Okay.
In standalone. So this typically is due to that. Overall, if you see the growth in Egypt has been very significant at about 11% for the year in terms of volumes.
Okay. And how do we see Egypt business henceforth? Because there is some pressure on the currency side and all those things.
No, the one thing which was characteristic of Egypt was the local Egyptian market was challenging, which was due to the Egypt devaluation. It is yet to recover fully, though there has been certainly a recovery, and that's why we had to make up our volumes in regions outside of Egypt. Okay, but the Egypt has done it has had a very good year as far as last year is concerned. We have certainly grown on volumes, as you can see, by almost 11%.
Right.
Yeah, we have grown on volumes by 11%. Yeah.
Coming back to a performance product, this quarter has been phenomenally strong, a 15.7% kind of a YOY volume growth.
Yeah.
Do we see this kind of volume growth sustaining at least for next 1 to 2 years?
The only thing that I want to tell you is that as I indicated in my opening remark, this year, particularly this last quarter, our volume growth, included sales from an intermediate product, which is obviously a spot opportunity. Now, this spot opportunity contributed to almost about 1%, right? Okay. About 1% or so. 0.6% it contributed to. And in the coming year also, we expect it to be there. So, but we need to keep this aside when we talk about a volume growth. If we keep this aside, we have grown this year as far as the local market is concerned by approximately 13.5%, okay, which is higher than the market growth rate. As I said, we will always be growing ahead of the market, and the coming year suddenly promises to be good for the home and personal care industry in this country, and Galaxy will keep up its tempo and momentum.
Okay. These kind of intermediary opportunity which you have seen this quarter,
yeah.
It's how often it is, how frequent it is, or...
See, you can't really predict it, okay? But whenever the opportunity arises, we suddenly exploit it, and when I say exploit, we use it. I use the word exploit in the context of, dictionary meaning of using it. Suddenly we respond to it very positively.
For which we need to have capacity available.
Correct.
And we need to be prepared with our capacities for such
And
opportunities.
because we don't create any capacity for these spot opportunities, but whenever we have these spot opportunities which are never strategic, we will always, let us say, use those opportunities.
And how many customers did we add this year, FY18, and what is our plan in terms of geographical expansion for next year?
Yeah, I think the total number of customers was approximately 55 number of customers. I think last year we had about 1,700, now it may be about 1,755 or so.
Okay, and any geographical expansion for next year?
We have added 5 countries.
This year, FY18?
See, totally, when we, before the, we have mentioned in our RHP that we have regular countries have 70, which has gone to, this year we, last year we did with 82 countries.
Okay.
Yeah.
The regular countries over 3 years is 75.
Yeah, regular in the last 3 years is 75. Okay.
Yeah, last 3 years is 75.
Yeah.
Specific to this year, it is 82.
Yeah.
Okay. Thank you. That's it from my side. Thank you.
Thank you,
Best of luck.
Thank you. A reminder to the participants, to ask a question, please press star, then 1. The next question is from the line of Rohit Nagraj from Sunidhi. Please go ahead.
Yeah, thanks for the opportunity. So in terms of Tri-K, as I understand that we were operating at more than 90% utilization in last year.
Yeah.
So are there any plans of expanding the capacity, and if so, what would be the capex that is envisaged for the same?
Yes, the answer is yes. And we are certainly increasing our capacities, and the capex should be approximately in the region of about
$4 million.
About $4 million or so.
Okay, and this is included in the guidance of 125 to 150 crores consolidated capex?
Yes.
Okay, and would this capex be completed in the current financial year, and the effect of the same would be also coming in revenues maybe towards the end of this financial year?
More or less we should take that it will come in only from the coming year, that is the next year, that is 1920.
Okay. And sir, are we finding any new products wherein there is a significant potential maybe in any of our 2 segments, performance or specialty care? Yeah.
Okay.
Any color on that?
Let me sort of give you a very brief on our innovation. Okay.
Right.
I would like to highlight certain significant achievements of 17-18. We commercialized 3 grades of a product called sodium cocoyl glutamate, which is the mildest of all anionic surfactants, and these were developed for baby care products, and one of these grades was fast-tracked to meet a customer's launch plan. Okay?
Okay.
So this is what is called sodium lauryl glutamate. Okay? So this can be used in body wash, baby care, face wash, shampoos, etc. But these 3 were addressed to, one was addressed to a baby care product, one was addressed to an end application of body wash, and another application was for hair care. Okay. Now all the 3 grades of this acyl glutamate, we call it, generally it's called acyl glutamate, they were manufactured exploiting our patented green technology.
Right.
Then, that was the one. Secondly, we have already talked about a product called GALAXYSURF, which is based on our patented technology. It's a synergistic surfactant, and this was adjudged as the best innovative personal care ingredient in the HPCI exhibition, which was held in January 2018, where the jury was appointed by a leading international journal, SOFW. So this is again a very interesting product which gives consumer desired attributes of foam, lather, sensory, and mildness, and the manufacturing technology was totally developed in-house. Then there is a product which is gaining more and more importance, consumer product across matured markets. This is called shower oil. Okay, So Galaxy developed the world's first non-sulfate oil-soluble surfactant called, triisopropanolamine lauryl sarcosinate, which is for the shower oil category. Now, this will be commercialized, of course, in 2018-19. It is under trial testing by our, customers. And this is again a product which is a very high premium product. During the last year, of course, we also filed patent applications for 2 inventions with respect to highly substantive water-soluble UV absorbers and preservatives for personal care and home care products. Now, last year almost saw 17 patents getting granted for 7 inventions. Now, apart from this, I also would like to talk to you about what has happened at our Tri-K. Again, Tri-K has again been coming up with innovations which get launched in the exhibitions like in cosmetics. Okay, now let me just outline these things. Yeah.
Okay.
See, last year Tri-K developed an innovative natural peptide product called Nature Pep. The first of which was launched in Bangkok, Thailand in November 2016. Since then, this has grown to 4 products, including what is called Nature Pep Quinoa, Nature Pep Amaranth. All these are from natural raw materials, and these were launched at the In-Cosmetics in Amsterdam just last month, that is in April last month. We are also developing products for as a natural alternative to silicone and petrolatum. These are synthetic products which get used in the personal care products. And Tri-K is developing natural alternatives for these products. And so Tri-K grew last year in terms of revenue by almost totally about 16% or so. So this has been, in a nutshell, what our innovation has done for us.
Right. So in terms of the product that you just mentioned, the innovative product, what could be a probable size or potential for these products from a revenue perspective? Any ballpark figure or number?
See, all we can say is that, these are products which go into, high premium products. So they take some time in terms of getting a critical mass even for our customers. Okay?
Right.
But these are products for emerging concepts. Okay?
Right.
These will have, a certain gestation period in terms of, growth. But the beginning has been made, and we are pretty, optimistic and confident that these products will grow in the coming years.
Right, sir, right. Sir, in terms of CAPEX, the entire CAPEX for the next year would be done from internal accruals, is that right?
Yeah, entirely from internal accruals.
Right. And so one just bookkeeping question. The effective tax rate for next couple of years would be again in the range of about 29-30%?
Yeah, it will be around, say, anything between 28 to 30, I will put it, depending upon the mix of profits.
Right, right. Thank you, sir. Thank you so much. And best of luck. Yeah.
Thank you.
Thank you. Participants who would like to ask questions, please press star, then 1. The next question is from the line of Bhavna Israni from Anand Rathi. Please go ahead.
Hello.
Hello.
Good evening, sir.
Good evening. Good evening, Bhavna.
Sir, can you please give the split of EBITDA breakup in between performance surfactants and specialty care products?
See, this is a confidential information. We have given it at the revenue level.
Right. Yeah.
Revenue and volume level we have shared it, but we have not gone beyond that.
Yeah.
Okay, thank you. And the other one is that the CAPEX which we are planning to start the contributing to the EBITDA or revenue from next year, like FY20.
Bhavna, excuse me, can you be a little bit more louder? I think the louder because very audible.
Audibility is a bit weak here.
Yeah, kindly be more louder.
Sir, I'm asking that the capex which we are planning, like 125 crores or 150 crores in FY19, is contributing to the revenue or EBITDA in FY20 or after that?
FY20.
FY20.
Yeah.
Oh.
Yeah.
Okay. And it's completely funded by internal accruals.
We have internal accruals of that order.
Yeah.
Okay, thank you.
Yeah.
Thank you.
Yes.
Participants who would like to ask questions, please press star, then 1. The next question is from the line of Amol Kotak from Max Life. Please go ahead.
Just one question, follow-up. Sir, what percentage of your capex for 150 crores of FY19 is for increase in capacity?
See, whatever we spoke to you is for increase of capacity.
The entire money, so there is no maintenance required.
Over and above the normal capex.
Sir, and this would not come phase-wise because in your presentation you mentioned about debottlenecking of capacity.
Phase-wise only because it's spread over the year, no?
It's spread over the year.
It's not that it is going to be...
Yeah.
It
so, various things will get commissioned at different points of time in this FY19.
So, do we see that Q3, Q4 onwards of F19, some sort of growth kicking in, or is it all FY20?
Not very significant in this coming year. Most of them will come only for the next year. Not very significant. There could be something.
And what is your R&D spend as a percentage of sales?
It's about 1%.
Yeah.
And that would remain more or less?
Yeah, that will more or less remain there. I think it is about 1.17%. 1.17%. It will remain around the same.
Okay. Thank you, sir.
Yeah, thank you.
Thank you.
Yeah.
Participants who would like to ask questions, please press star, then 1. The next question is from the line of Ranjit Sirumala from B&K Securities. Please go ahead.
Hi, sir. Thanks for the opportunity.
Hi.
Good evening.
Good evening, sir. My question is on the US FDA inspection front.
Correct.
And congratulations for you for getting this cleared.
Yeah.
How many of our products would be facing this kind of an audits, and if you can share some...
there are only 2 products, and the total amount of sales into USA is less than 1%. Less than 1%. Not even 1% is high. It is less than 0.2%. Okay. Now, what is important is that these FDA inspection, when they came, was indicated as per what is called voluntary action, which means we are supposed to do it by ourselves, which we did. We totally responded, and then so it stands closed. And throughout this period, we have been continuing our business of sending it to USA. Okay, because these observations were procedural in nature. What is called, they give certain suggestions, and we had to sort of respond to them. So we have responded to them in just a matter of 1.5 months or so. And then we have completed, and then it stands closed.
My question was more on the outlook front. Would the product expansion or the geographic expansion would involve more of such products? And
No. See, only these 2 products which are under Sunseed, what is called octocrylene and octyl methoxycinnamate, come under US FDA ambit. And no other product comes under US FDA ambit.
And the future product pipeline is also the same?
Yeah, absolutely.
Okay, sir. Thank you.
If at all, maybe, I don't know. See, and as I said, this comes under the US FDA ambit only for sales in US. Okay?
Yes, sir.
These products also get sold in other parts of the world. There, they don't come under the ambit of US FDA.
So, Ranjit, it's suffice to say that based on whatever visibility we have, any future expense that we're going to do, it will not involve anything more than these 2 products in terms of the US FDA.
But all the same, the kind of high standards that we have passed the scrutiny of US FDA speaks about our competency of quality and quality assurance.
And what is also important and significant, particularly for us, that it was a great learning experience. Our people felt very happy facing this particular audit. and in terms of the way we responded. So it was also a good bit of learning for our people.
And this definitely talks volumes about our quality competency.
Yeah.
Yes, sir. Certainly it does. Thank you.
Yeah.
Thank you. Participants, to ask a question, please press star, then 1. The next question is from the line of Saravanan Vishwanathan from Unify. Please go ahead.
So can we have the production volumes for FY18, sir? Between
So what I'm saying is that the capacity utilization, Saravanan, for the full year was at about 68.6% to be precise.
Okay. So totally our production was approximately 1,97,000, right?
That was sales volume, right?
Sales.
Yeah. No, I was asking about production volume broken up into performance surfactants and specialty care.
See, Saravanan, it's not that we have any great deviation in terms of opening and closing inventory. So typically, you will not be wrong in...
Yeah. See, what is important, Saravanan, for you to get it is that some of the production is also production of product for captive consumption. Okay. So totally, for example, our production was approximately 2,48,000 tons. Okay. So the balance between this and the sale, order of magnitude will be also used for captive consumption.
Okay. Yeah. Thank you.
Thank you. The next question is from the line of Rohit Nagraj from Sunidhi Securities. Please go ahead.
Yeah. So what is the geographical breakup between domestic and export sales? If you can quantify it in terms of numbers?
Yeah. So, see, India contributed to approximately 35%, right? India was approximately 35%. This is of standalone or consolidated? Consolidated.
Right.
AMET region was approximately again 36%, and balance is rest of the world.
Okay. And as I understand, in terms of expansion, we don't have any significant headroom or scope at Taloja and Tarapur. So predominantly the next phase of expansion which we mentioned is coming in Jagadia and Suez. Is that right?
See, what we would do is that the so-called brownfield expansion will come at Jagadia and Egypt. Some expansion is coming at USA also. And in our existing sites like Tarapur and Taloja, we are also, I am pleased to inform you that we got a environmental clearance for one of our sites at Tarapur called G15, where we are putting up what I call a small plant, okay?
For specialty.
It is particularly for specialties. And in the other sites like Tarapur and Taloja, which are almost full, we will always have certain small debottleneckings.
Right. And sir, is it possible to get a view on what could be the increase in capacity post this expansion? So maybe a 20% or 30% increase in capacity, which would be sufficient for the next...
we would like to sort of state it once it gets over. Okay?
Okay.
Once we have fully sort of implemented it, then we would like to state it.
Okay, fair enough. But this capacity increase, would it be sufficient for our volume growth for the next, say, couple of years?
You're right. As I have mentioned even before, normally the horizon for performance surfactants is about 3 to 4 years when we create capacities. Okay?
Right.
And for specialties, sometimes it can be as much as 7 to 8 years or so. That is the horizon. Why we do this is because getting clearances involves time. Okay?
Right.
Number one. Number two, also in the context of a minimum economic size in terms of these capacities. Okay? So we always, if we take what is called a substantial capex, it has to meet the minimum economic size criterion.
Right.
So when we talk about performance surfactants, you can take it as a horizon of approximately 3 to 5 years or so. Okay?
Okay. Fair. Thank you, sir.
Thank you. Participants who would like to ask questions, please press star, then 1. Participants to ask a question, please press star, then 1 on your telephone keypad. The next question is from the line of Rohit Nagaraj from Sunidhi Securities. Please go ahead.
Yeah. Sir, what would be the revenue contribution from top 10 customers this year?
Yeah, we have that. So the top 10 customers for FY18 was approximately 55%.
Okay, so similar to what it was during FY17.
Yeah.
And sir, in terms of raw material prices, is there any volatility which was observed in the recent times?
I presume, Rohit, that you saw our presentation that we have uploaded in the website, not in the website, in the Bombay Stock Exchange also. And it will be very interesting for you to have a look at it. We have very clearly given the graph. Okay?
Correct, sir.
Yeah,
right.
So Rohit, I think your question was moving forward, do we see volatility?
Yes, and predominantly I think ethylene oxide forms about 8 to 10% of our raw material, if I'm not wrong. And recently the crude prices have also shot up. So given that phenomena, is there any impact?
So the way we see, the way we look at it is that it will rise and fall in sympathy with the crude petroleum prices with a lag. Okay.
Correct.
And obviously, last year it moved up. Okay, probably last 6 months we have seen that moving up all the petrochemical-based derivatives. With regard to oil-chemical-based derivatives, okay, we do see this volatility continuing, and we are well geared to, to ensure that we are able to manage this volatility pretty well.
And this volatility has been a continuing phenomenon, at least for the last 7 years, in a very intense way. Okay. And it is extremely important for us, and then this is what we have done. We have to navigate this volatility very well, and this is what we have been doing. Okay?
Correct.
Basically, we have mastered the technique of managing this volatility through our risk matrix management.
Yeah.
Right, sir. Perfect. Thank you, sir. Thanks a lot.
Thank you. The next question is from the line of Saravanan Vishwanathan from Unify. Please go ahead.
You mentioned the top 10 customers account for about 55% of your revenues. So I presume in most of the cases you will have a sort of indicative annual offtake plan from each of your customers. Is that a...
usually you are right, and see, that's how we make our budget for the year.
Yeah.
And so this is enabled by our long-standing relationships with them. So customers, when we have a dialogue with them, they do talk about their growth plans. And we have a fair idea of what will be their consumption and offtake for the coming year.
Yeah, that is the beauty of strategic relationships.
Yeah, definitely. So is it only with the top 10 or the percentage is slightly higher? Like if we were to...
See, it may not, as a matter of fact, Galaxy almost markets 95% of its sales by direct marketing. Okay? So our people out there in the field, meet our customers, so they have a close interaction with them. So they have a picture of what each customer looks at his business for the coming year. And that forms the basis of our budgeting process.
Success is a function of preparedness, knowledge, intuition, and ability to create magic.
Yes, definitely, sir. So given that kind of visibility when you have, so can we not have some indicative volume growth?
So one of the things that Sharon and I would like to state here is that when the customers do share those volumes with us, it's also subject to, it's not subject to in terms of how the market pans out. Okay. So what we would be probably when we report quarter on quarter, we'll be able to tell you that. Right. But we don't want to hazard any guess, and although we know the number, we don't want to hazard, we don't want to commit that now because it is not right.
No, anyway, Shekhar gave you an indication we will grow above the market growth.
Yeah.
That is the indication.
The market growth.
And uniformly across geography.
And in terms of the macroeconomic picture, Sharavanan, we do see that, India and the geographies that we focus on are, leaving behind a period of tepid growth. And then we are moving into an era of, I would like to optimistically say, an era of buoyancy. So let us hope that, this trend will continue.
Okay. Because, you have made an exhaustive presentation. In that, if we see last 4 years, the volume growth has been at a 9% CAGR.
Yes.
But EBIT has grown at a 16% CAGR.
Right.
Going forward, it looks like we may, is there a scope to do a similar performance, or EBITDA growth will mirror only the volume growth?
See, what you need to know is that we are also, setting up capacities. See, we always believe in setting up capacities in an anticipatory manner. So Galaxy is growing as well as investing. Okay. Yeah. So we would expect the EBITDA growth in that particular zone.
Higher than the volume growth.
Yeah, higher than the volume.
Yeah. Okay, that is helpful. Thank you. All the best. Yeah.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question.
Yeah, so before we sign off, I would like to happily share with you that we recently got the Trishul Award from Chemexil for being one of the...
Outstanding export performance.
Yes.
Yeah. So this is an award which is given through the Chemexil, but by the Ministry of Commerce. So we got this award and we collected it at the hand of our Commerce Minister, Mr. Suresh Prabhu. Yeah. So, ladies and gentlemen, I would like to thank you all for joining this call. I do hope that we were able to answer all your questions. We continue to work on the strategies, including cross-selling our products to existing clients, continuing our innovation to provide solutions to our customers, and penetrate both the high-growing markets like India and AMET, and continues to focus on our specialty car products as far as the mature markets are concerned. So thank you very much for being with us. And for any further queries, kindly get in touch with us or SGA. We will be happy to address all your queries. Thank you once again. And I think we will see you again in another 3 months. Thank you.